This meeting is being recorded.
Good evening, ladies and gentlemen. I welcome you all to the Q4 and FY23 post-earnings conference call of Sharat Industries Limited. Today from the management we have with us Mr. Sharat Reddy, who is a part of the promoter group and executive director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, and these forward-looking statements may involve risks and uncertainties. Also, this is a reminder that this call is being recorded. I would now request the management to quickly run us through their investor presentation and give us highlights for the quarter and for the year, their plans and visions for the business in the coming years, post which we can open the floor for Q&A. Over to you, Sharat.
Thanks a lot, Vinay, and good evening, everyone. I'm just going to go ahead and share my screen, and we have a brief presentation which is being uploaded on the BSE side. Is my screen visible to everyone?
Yes, Sharat.
Yes.
You can go ahead.
Thank you. So we just have a brief presentation to take us through the company's journey as well as our results from the recent quarter and the financial year of 22-23. Besides that, we have some inputs as an overview for the business as well as the sector overall. So I'm Sharat Reddy. I'm the Executive Director of Sharat Industries Limited. We are an integrated aquaculture company based out of Nellore in Andhra Pradesh, and we are one of India's oldest aquaculture firms. We were established in 1990. We have a total of 4 divisions in the company, namely a hatchery, a farm, a feed mill, and a processing plant. The presentation here gives us insights on the capacities of each of our divisions. Our farm, which is roughly 500 acres in size, has a capacity to produce up to 2,000 tons of shrimp annually. We have a processing plant which has a production capacity of roughly 7,500 tons per annum, and a feed mill with a production capacity of 22,500 tons. In addition to these divisions, we also have a hatchery which has a production capacity of 500 million seedlings per annum. We have a little over 2 decades of experience in the export sector and have a master customer base of more than 25 different customers across more than 10 countries. Besides this, our domestic customer base is primarily for our shrimp feed as well as the hatchery business. Being an integrated player, these 4 divisions work in close proximity to each other. The entire operation starts off with a hatchery where seedlings are produced. The feed mill manufactures shrimp feed, and along with the feed, which
Sharat, would you like to move to the next slide?
Sure.
I think that's
with respect to the journey of our company.
No, because it's not visible on the screen, the slide change.
Oh, I'm so sorry. Are any of the slides visible right now?
No.
Just one second. Let me quickly stop and resume the page.
Let me do it from my end.
Thank you.
Is this fine?
Yes, thank you.
Go ahead.
We can proceed to the next slide. Yeah, so we were here. The inputs from the farm, the inputs from the hatchery and the feed mill typically contribute to growth of shrimp at the farms, which is eventually transferred to the processing plant for production and export. Next slide, please. As mentioned, we've been in the business for a little over 30 years. We went public in 94 at a time where aquaculture was booming. Unfortunately, in the late 90s, there was extreme disease that affected the industry. but we're proud to say that we're one of the few players who's not only persisted in the industry for 3 decades, but has also made some significant contributions. We were the first company in India to introduce Vaname, which is now a successfully farmed shrimp species that accounts for more than 85% of all shrimp produced in India currently. And in doing so, we were able to contribute not just to our company's growth, but to the rest of the sector as well. Because prior to that, disease for earlier species was a severe threat. And all of this is possible because of our integrated approach towards operations and our ability to relentlessly continue R&D work, both at the farm and the hatchery level. Post that, our focus has been primarily on the export division. Next slide, please. Which contribute to a little over 2/3 of our overall revenue. This just gives a summary of the top management in the company. My father, Prasad Reddy, is the managing director and the founding promoter of the company. He's had about 4 decades of experience in the sector. I've been part of the sector for about 10 years and the company as well. My background is in mechanical engineering and industrial engineering. I did my master's in the US and I came back because I felt that this entire project had tremendous potential. And I was excited to join the family business and take it to whatever heights are possible. Next slide, please. Next slide. So with over 3 decades in the sector, we have strong brand recall, especially amongst our customers and our vendors as well. Our strategic location in Andhra Pradesh has helped us grow the business over the years as the government as well as the geographical advantages of being in the state have been beneficial for aquaculture overall. We have a well-integrated farmer network owing mainly to the success of our hatchery. And with all these connections, we typically buy back antibiotic-free shrimp, which we are able to export to premium nations such as the US as well as countries in the EU. The vertically integrated nature of our business enables us to absorb any shocks or ripples that the sector may face from time to time. And this is one of the reasons we managed to stand the test of time despite the volatility that prevails in aquaculture from time to time. Besides this, the US has been a major destination for our exports division. And over the last 18 months, we have diversified further into some countries in the EU, Russia, which has been an emerging opportunity, as well as a few countries in the Asian region. We are widely certified. We have a 4-star BAP accreditation, which is very rare in the sector because all 4 divisions of our company are certified by an international body. So this enables us to cater to better customers who more often than not pay a premium for the traceability that we're able to provide. Besides this, at the feed plant level, we have a total of 4 varieties of shrimp feed. And in the processing division, we have about 10 raw frozen varieties, as well as 3 cooked frozen variety products that we currently export. Next slide, please. What we believe that would be the key growth drivers for the company between now and the next 4 to 5 years are just listed here. Our current capacity utilization on average across all the divisions stands at about 50%. And we intend to scale it up to about 90% over the next 4 years. We feel that this will contribute significantly to a profit margin. And our other intention is to integrate further with our customers that we currently work with by offering them better products or higher value products, as we may call them in the sector. We have recently added a cooking line to our facility. And during the course of 22-23, we managed to gain certifications for cooked products to the US. And we intend to leverage all that during the upcoming financial years, current years as well, to offer more ready-to-eat products to our customers. And we believe that this will not only ensure that we have a long-standing relationship for the next decade or so, but also significantly contribute to the profitability. Besides this, during the course of 22-23, we had a strategic partnership with a firm based out of Singapore. And the whole idea of associating with a biotech firm is to use their inputs for our farm division. We were able to use their biotech products to significantly improve operational yields at the farming division. And we see a long-standing path to success with this association. So a JV was started, and that has helped us build in a lot of operational efficiency at the farms. Owing to the previous success that we've seen through our consistent efforts in R&D, we will continue to invest our time and effort in furthering efficiency at farm levels through various technologies that currently exist. And we intend to continue to share updates on the same as the months move on. Next update, please. Next slide, please. So overall, increasing our capacity utilization, improving the product offerings to our customers, and working backwards at the farm level to reduce risk of antibiotics and improve productivity in terms of lower cost farming. We believe that we will be able to achieve a significant growth in our EBITDA margins over the next 3 to 4 financial years. We've seen a sizable increase during the course of the recently concluded year and have every reason to believe that we are on a right path to a long-term success. Next slide, please. This has been covered in the previous slide, so we'll move on to the next slide. In addition to improving operational efficiency at the core level here in aquaculture as well as processing, we have been investing a certain amount of time towards improved traceability. Now, with the advent of internet that has permeated even this sector, we believe that customers will be able to pay us a premium for end-to-end traceability for the products that we are offering. We've currently seen some interest, and we'll intend to continue to work in this direction. Considering that renewable energy is quickly going to supplement a lot of manufacturing industries that are heavily dependent, for example, our freezing or processing field, we intend to invest some time and money in the years moving forward to reduce our energy costs, as we have a captive consumption that will certainly benefit from this. Next slide, please. A brief SWOT analysis of both the company as well as the sector. Our strategic location in Andhra, extensive amount of land available for farming, a robust farmer network for sourcing, and an extensive customer base, mostly in the US and other prominent regions. We feel that these are all going to continue to be strengths for the company moving forward. We do feel that innovation in the value-added product range is an opportunity that is worth exploring, and are currently making some efforts in that regard. Countries like Russia have opened their markets up in a significant manner with our company, and we intend to build on the ongoing Indian-Russian trade relations that currently exist. Considering that very few companies in India have certification to export to Russia, we believe that under the current circumstances, it could help us differentiate ourselves with the competition. From a threat perspective, considering that this is a livestock-based industry, weather will always continue to play a role. International volatility or geopolitical issues can disrupt business from time to time. But as a company, we've managed to absorb all these shocks as a result of a very agile approach that we've adopted over the last few years. And we believe that despite the threats, we would be able to head in a positive direction. Next slide, please. So some key highlights from the year that has recently ended. We reported a little over 34% in terms of year-on-year revenue, about 50% increase in our EBITDAs, and almost a 90% increase in our net profit. We owe it all to the strategies that we had outlined some time back, And we intend to continue this momentum and build on the same over the next few years. We are aware of the threats that the industry is facing currently, but our strategies, as well as our extensive associations with our customers and vendors, will enable us to sail through the current circumstances better. Next slide, please. This is just a further deep down into the quarterly financials with respect to Q4 of the recently concluded year as well as the previous year. And an improvement in terms of figures can be seen over the last 4 financial years. Compared to where we stood at 1920, I think we've come a long way. The seafood industry overall is about $160 billion in terms of revenue in 2021 and is expected to continue to grow. We're very happy and proud to be part of this blue revolution, both in terms of global trade as well as the progress in India. And considering it's such a large market out there, we are very optimistic that there's a substantial runway for long-term success. Next slide. Indian seafood exports have been consistently growing over the last decade. Owing to COVID, there were some minor hurdles that the sector had to face in 2021, but bounced back strongly in 21-22. And even 22-23 has been largely a successful year for most of the sector. So this has given us enough confidence to plan for the future with a lot of optimism as well. Anime exports continue to dominate seafood exports from India, and we do not see that dipping in the near future. We believe that the sector may adopt more value-added products to keep the revenues high as well as the profitability as well. And this is a natural progression that we've seen from other countries as well over the last decade or so. And very happy to note that India is following a similar path in that regard. Next slide, please. This brings us to the end of the presentation, and we're now open for any questions.
Thanks, Sharat. We'll take the first question from Agastya Dave. Anybody else who wishes to ask a question can use the option of raise hand next to the name. Agastya, you can unmute and ask your question.
Thank you very much. Mr. Reddy, 2 questions. One is, historically, why have your ROEs trailed the industry leaders? I understand that you have a very small size, even now, and I understand why the ROEs are low today because capacity utilizations are low. But historically, what was the reason for your business not really ramping up and profitability staying below industry average? And my second question is the current situation. What are you seeing macroeconomically? What are the demand trends for the industry as of now? And more importantly, what are the supply trends? We believe that there is a lot of competition coming from South America. So what are you seeing on that side? And given that US economy is still pretty strong, when do you see the pickup happening for the Indian industry and for your company?
Okay, I'll answer one question at a time, if that's fine. So we've been in the sector for a little over 30 years. So in that sense, we've seen a lot of ups and downs because it has been a volatile field in the past. I've been part of the company for about 10 years and have been playing a more central role in terms of leading operations in the last 4. And every year we have seen a significant improvement in terms of the numbers. So during the course of the last 5-6 years, we changed our product offerings to our customers, have added a lot of auxiliary infrastructure at the processing and the feed plant level. So we've essentially undergone a transition, and now I think we are on a great path towards a long-term success. So even if our numbers perhaps might not have been optimal in the past, I think we've done much better and will continue to be on this path for the years moving forward. Now, with respect to demand globally, we have seen demand contract a little over the last 6 months. And this is something that we expected, considering that there have been so many macroeconomic factors that have been governing this. with the geopolitical tensions, I think there's been a lot of energy cost increase, and that has in general impacted the frozen food sector. But now people are, things have stabilized in that regard. Right? We do expect demand from the US to be a little slower than historically, but we have other markets that we are currently targeting more aggressively, and Russia happens to be one of them. China too was a little slow during the course of the last calendar year, but since overcoming their COVID issues as well as the seafood ban, business to China has improved significantly. So while the EU and the US may not be as attractive as a proposition in the short term, we believe that countries like Russia as well as China will give us enough of an opportunity to balance the trade out. As far as supply is concerned, there has been slightly lower supply from India as well as several other countries globally. Ecuador did see a tremendous increase in their production last year. But as we speak, we understand that they too are going through their own cycle of slightly lower production, diseases, and so on. So considering that this is a commodity and we've been in it long enough to see multiple cycles that have been up and down, we are not too fazed by what's happening currently. And our integrated approach towards this entire business will continue to keep our revenues stable. And this is our broad opinion on the subject. Is there any question that I may have left unanswered? Hello?
No, sir,
You're on mute, so we can't hear you.
We'll take the next question from Harsh.
I'm done. Am I audible? Hello?
Yes, Shiva. Thank you.
We'll take the next question from Harsh. Harsh, you can unmute and ask your question.
Sure.
Hi, Eamon.
I think there's a problem with his line. You just unmuted. You can ask a question.
Hi, am I audible?
Yes, you are.
Yeah. Thanks for the opportunity, sir. So, sir, my first question is on the newer markets that are available to all the shrimp processors. So you did mention about Europe and Chinese market. So just to delve a little bit more on it, so what is the overall industry's update on getting into newer markets? Because so far Indian shrimp processors have been solely focused on US followed by China. But now I see a lot of the shrimp processors are talking about different markets like Saudi Arabia, European Union, South Korea and Japan. So we as Sharat, what have we done specifically? Because I think a lot of these markets have their own nuances and approval. So where are we on those things? And also overall industry, where do you see the industry heading?
Well, in terms of approvals, I'm pleased to inform you that we are certified to export to a majority of the customer base that currently exists globally. This includes the Middle East, the Far East, EU, and then Russia as well. In fact, we are one of the few entities in this ecosystem that has a certification for Russia. And we see that being a very good opportunity during the course of this financial year. In the past, we have had trade relationships with certain countries like Korea, and that demand from Korea as a country has both increased and decreased over a period of time. And this year, there is more opportunity than in the last few years. I think when one door opens, another closes. The US markets are a little slow right now, but they still continue to dominate in terms of overall imports globally, as well as the Indian exports side. So we're just going to try and balance the trade out as effectively as possible, focus on those countries that are more profitable, and continue to maintain our relationships with customers that we built over a very long period of time. They've been supportive under difficult times as well, and I think it's important that we did our part. And with respect to other companies, I'm sure everybody has their own strategies that will work out well. for us, I think Russia will play a very critical role during the course of the next 2 to 3 years. The Chinese market has also improved in many ways, and they have certain niche products that we are able to cater to. So I think that's worked out well for us.
Got it. So, sir, then a little bit more on the Russian market, if you could talk about what kind of product profile is required there, and also maybe what kind of volumes are we looking to supply to Russia? And I'm not looking for any specific numbers, but just a broad sense of things. Say, suppose today 90% of our business is coming from US. Say 1 year, 2 year down the line, can this mix change to 20-30% coming from Russia or maybe some other markets? And overall, what is the kind of margin profile? Is Russia market like to like similar with US market profile, margin profile, or it is lower than that? Like China, we understand is a more commodity market, right? So I'm just trying to get a sense on those lines.
Got it. So the Russian market in many ways is actually more lucrative than the US market currently. I think considering that their supply from other countries has dwindled due to certain geopolitical reasons, Indian exporters to Russia have been seeing a significant premium compared to other countries. With respect to China, yes, has been commoditized for a while, but it's also the case sometimes when it comes to the US market. It's a very competitive market out there. But so as long as there are certain niche products within the shrimp industry that companies can cater to, the margins still exist. And last year, a majority of our focus was on the US. A little over 80% of our overall exports were to the US. And Russia made up roughly about 10% because we were a little cautious during the first half of the calendar year, especially when the war began. But once it was clear that there is an opportunity here and that the trade ties had actually improved, we started increasing our offerings. This year, we see more than 20% of our overall exports to be to Russia. And so far, we are on track to that.
Okay. That's really helpful, sir. Also, sir, if you could talk a little bit more about the competition that we saw from Ecuador and US. Ecuador has been increasingly taking away market share. So what is helping them? Is it their pricing and the proximity? That is the only two reasons? If yes, then how going forward are we going to change anything? Because the proximity issue cannot be changed. Beyond the point, the scale at which Ecuador is now, I think then economies of scale have kicked in. So again, in terms of competitiveness, there will be a difficulty, pushing them back. So going forward, how do we see this competition specifically from Ecuador in US market?
There are multiple theories here, and I can probably offer a few opinions from my side. The Ecuadorian market primarily catered to China initially, or the exports from Ecuador were actually focused on the Chinese market for the most part. And when China underwent its own bans with respect to COVID and other factors, Ecuador had to look for an alternative. Right? In doing so, they had to slash prices significantly and export product to whichever markets were available. What they have done has not been conducive for the sector, and I think a lot of exporters would reflect the same. As we speak, the farmers and a lot of people in the supply chain in Ecuador have been facing the repercussions of this. So we don't expect the trend from the previous year to continue for a long time, as it may not be sustainable for that country. Agreed that they have the advantage of closer shipment times or shorter shipment times to the US, but a vast majority of the US market it consumes retail ready products. And that is something that Ecuador has not really developed yet from a processing standpoint. They've been very strong as a farming country, but most of the product that they export typically goes for reprocess, and which is why the Chinese market was their major customer. So when things even out post-COVID, etc., we expect there to be a rebalance, if I may. And in that sense, the Indian market share will not really be affected much because we've been, as a country, a very strong supplier to the US, both in terms of quality, consistency, and price. So this is a blip, and we don't see this going on for too long.
So, when we talk to our customers, so do we see, I'm asking this on a qualitative standpoint, that do we see our customers differentiating between an Ecuadorian company supplying to them and a Indian company supplying to them? So what I'm trying to understand is Indian supplier considered better compared to Ecuador? So once the things normalize, US customers will like to shift back to India. Will that be the case, or there will be some, pushback from the customer also, will stick to Ecuador only?
So a lot of this depends on the type of product. Under shrimp, there are so many categories in terms of how a product can be processed and exported. I think the US still prefers India for several products because we have established consistent quality over the years. And it's also something that other countries such as Ecuador may not be able to replicate in the short term because it's a highly labor intensive process and labor is typically optimally priced in India, right? From a global perspective. There will be some products that we may not be able to compete with Ecuador with, both in terms of price as well as lead time. But besides that, I don't see too much of a shift because the customers are also loyal to India as a country as we've been a great part of their growth journey.
Got it. That's really helpful. If I may squeeze in one more question, or I can come back into whichever way you suggest.
You can continue, Harsh.
Thanks. So, sir, just from the general industry capacity point of view, so last 1.5 years, we saw a lot of players expanding capacity because of the expected growth that the whole industry was seeing, but suddenly things turned, and now we have a situation wherein everybody's capacity has come on stream. And so first, if you could say what is the overall industry levels capacity utilization, and also going forward, do we see for next 1 year or something this excess capacity will trouble us, or will this phase out in, say, by Q2, Q3?
I honestly might not be able to speak much for everybody else. I think it is true that capacities have increased, but in many cases, it's quite common for people to renovate or build new capacities and close down earlier ones. So I'm not sure what the strategies of other people in the sector may be. But I think so as long as people focus more on value-added products, they can continue to build profitability, and that's the direction that I believe that most people should head in.
All right, sir. Thank you and all the best. Thank you for patiently answering everything.
No problem.
Thanks, Harsh. We'll take the next question from Yogansh.
Sir, that was me. I think Harsh is supposed to ask now. Yogansh, I've already asked.
Yeah, sorry, there's been a switch between our names. That's why.
Okay.
My first question is about when I look at a balance sheet, there is a non-current receivable items which has been 4 to 5 crores in the last 2-3 years. What is on this respect to, and what kind of provisions have we taken on these receivables?
I will have to get back to you with respect to specifics, but if I had to answer this from the top of my head, I think over the last couple of years, we have had slight slowdowns with respect to receivables in some sectors, especially in the feed division, because it's a largely farmer-centric market. And despite us having a lot of sales through dealers and distributors, collections had been slower than anticipated as a result of COVID. Unfortunately, the peak COVID waves in India over the last, I think in 2020 and 2021, coincided with what we consider the peak season in terms of shrimp as well. So while farmers were able to produce a lot of shrimp, they were unable to get paid a commensurate amount of money. So that has resulted in a little bit of a slowdown. So this account head will mostly be that, but I can get back to you with further details at a later point in time.
Yeah, thanks for that. My next question is about the volume of processed shrimps which we are selling. Is it possible to share those volumes?
Sure. Do you need information from 22-23, correct?
Yeah, and maybe also for FY22. So just to compare year and year.
Okay. Is it possible for us to do that at the end of today's discussion?
Yeah.
I don't have the numbers with me right away. because we had that reset presentation, but we have it and can probably mail you after this.
Okay. And my next question is about the business breakup from a different segments. So from processed shrimp, feeds, and hatchery. So what is the kind of revenue breakup we have from these segments?
So about 66 to 73, let's say a little over 2/3 to on average 3/4 of our revenue comes from the exports division. About 20 to 25% comes from the shrimp feed manufacturing division. And about 5 to 10% comes from the farm as well as the hatchery division. So it does vary based on the seasons, but on average, exports is a major revenue contributor, followed by feed, and then the farm and hatchery division together.
And in a farm and hatchery business, do we grow our? So what is it that we do? Is it contract farming for our own entity, or is it also contract farming for others?
So currently, all our farming endeavors are for our own entity. We have a farm of which some capacity has been utilized. We intend to continue to build on that over the next couple of years. Most of the produce is transferred to the processing plant for exports. In the event that the size or quality of the shrimp that has been produced is not suitable for our export requirement at that given point of time, we sell the product domestically, either to other exporters or any other aggregators. And from a hatchery perspective, the seed that is produced is primarily used for our own operations. And in some cases, we also sell that to other farmers who are in need of that product. So, in fact, when we launched our feed commercially in 2011, we were able to sell seed and feed together, and that gave a lot of farmers tremendous success. So we managed to leverage all of that goodwill eventually by sourcing the product from them consistently over the years after that.
And what percentage of our processed shrimps comes from our own farms versus bought from other farmers?
So currently, the total production at the farm to the processed requirement is about 10 to 15%. On one side, we have been expanding our processing offerings as well, right? So that has also had an impact on terms of percentage. But over the next few years, we want to get to a point where our own farms or contract farms can contribute anywhere between 25 to 30% of our overall requirements for exports.
Okay. And my last question is about our raw material. So what are the kind of pricing trends which we are seeing in fish meal nowadays?
Fish meal has been largely stable over the years, over the last year or so. We've, in fact, were impacted more by soya. And since our consumption has not been very significant, we have been able to enter into contracts with some of our regular vendors. So I think on average, fish meal ranges anywhere between 90 to 110 rupees during the course of the year. But we've figured out when to be able to order a large chunk of our requirements in terms of seasonal availability. So,
and with the global decline in soybean prices, what are the current prices in India?
I think we are broadly buying the product at roughly between 45 to 50 rupees on average. Sometimes it's a little higher. And this is per kilo. But we could probably give you specifics again, in an email. So as long as all your questions are specific, we'll be able to answer them as well.
Yeah, perfect. So with the softening of raw material prices, is that also a lever for gross margin expansion for us?
For the feed mill, definitely. Compared to calendar year 21, I think 22 was a lot more stable, and we did see a significant reduction in key raw material prices. So that did contribute to the gross margin at the feed division.
Okay, I'll come back in the question queue. Thank you for answering my questions.
Yeah.
Thanks, Harsh. We'll take the next question from Yogansh. Harsh?
Custom reports we use. So just one question. Couple of months back, there was a news article that, after the prices of feed were increased, the government had stepped in and asked to, roll back the prices, and the industry had to do it. So Now, what is the situation like on ground? Is the government still, getting involved into a lot of it, or now that thing has passed?
You are right in terms of the government intervening at an earlier point. I think at that point, they just wanted to ensure that there was less volatility in the aquaculture market, one way or the other. And it was largely done to protect the interests of the shrimp farmer, who's very, very essential for the entire supply chain. In the recent past, there has not been any significant involvement from the government side. So we'd like to believe that it was a one-off.
And now with because again we are seeing news articles of Indian shrimp farm gate prices crashing down, and so are we expecting any similar move by the government to come in and maybe this time put a tax on the processor to do something so that the pain from the farmers can be taken away? Are we expecting something on those lines?
That did take place briefly towards the end of the last calendar year. And while there was a lot of industry government interaction, I think people also were able to set up effective channels of communication to reduce such volatility. So currently, of course, there is a reasonable amount of speculation on the prices, but we expect things to be fairly stable moving forward. And that way, the government and industry have been on better communication terms compared to previous year.
Got it. Thank you.
In the next question from Suman Agarwal.
Yeah. Good evening, Mr. Reddy. Looking at the revenue breakup, we can see that 66% comes from your exports, 25% from the feed, and the rest is from farm and hatchery. So my question is, can you give us the margin breakup of all the verticals? And also, will this vertical breakup remain the same, or will there be any change in the future?
So, okay. Profitability across these divisions typically changes based on seasonal parameters, ma'am. So if you look at farm, for example, there could be a scenario where we have a very good crop. Unfortunately, if the farm gate prices for the sector are not as competitive or lucrative, then the margins will be slightly lower. And the same applies both for the feed as well as the exports division. Typically, the feed division has more steady margins, unless, of course, we have scenarios that we experienced last year or the year before in terms of sudden spike in raw material pricing. And the processing division, again, depends on whether global parameters are stable. So I may be able to give you some kind of an indication or indicative range, but at least in the last 2 to 3 financial years, there's been so much volatility that none of it might hold good.
Exactly. That is what the question is.
Right. So what's really worked for us, and maybe a part of good fortune as well, is that every year we have noticed, especially in the last 3 years, that while one division may be under a little bit of duress because of certain factors that we can't control, another division has stepped up. So last year we had a good contribution from a farm division, and that really helped us to keep the profitability stable. But so some good fortune here, and then it has to probably compensate for all the other factors that we are not able to really influence as a small and medium company in the sector.
Okay. And sir, does this revenue breakup remain the same in the coming years, or do we increase or decrease somewhere?
I think broadly speaking, the exports will continue to contribute anywhere between 2/3 to 3/4 of our overall revenue. And I think the feed will also remain the same. If anything, by trying to ensure that more of our farm produce is absorbed by export division, we might see that dipping a little. So it may remain 5% or less, but may not increase towards 10%.
Okay. Thank you.
Thanks, Suma. We'll take the next question from Rajiv.
Sure.
Hello. Thank you for the opportunity. My first question would be, can you throw some light on the strategic partnership that you are talking about, and which all areas would this be in?
Okay. So the strategic partnership or the joint venture that we started last year was with a company that's into biotechnology, essentially. So this is a Singapore-based company that has operations in India. And while most of their products have been in the agri sector, over the last few years, they've developed a few probiotics for aquaculture and primarily for shrimp farming. So our objective was to use their products for our operations in the farm and reduce the risk of disease and also improve efficiency in terms of the amount of shrimp that we grow per acre. So typically tonnage or productivity has improved for us. And these pilot projects have given us a lot of insights in terms of how we can scale rapidly over the next few quarters or years. And eventually we hope to have a series of satellite farms which could increase our own farm contribution to the exports division. Because we believe that unless we are anywhere between 25 to about 33% own farm contribution to exports, we might not be able to effectively absorb any other ripples that may come in the future. And I think that model has been quite successful in other sectors as well. So.
Okay. My next question is, can you share your geographical revenue breakup and which geography could become a major share in revenue as you grow
on? While I don't have the figures right now, I will be able to share the specifics later, maybe through an email. But broadly, about 75 to 80% of our overall revenue from exports has come from the US in the last year and the year before. The rest has predominantly been the Asian market, out of which Russia is a part. And moving ahead, we might steer a little away from the US and focus on other markets as well. So we could see the 75-80% dipping a little bit, maybe closer towards the 60s in the upcoming or the current financial year.
Okay, thank you.
Sure.
Thanks, Rajiv. Anybody else who wishes to ask a question? Yes, Yogansh.
Yeah, so I would like to ask a few questions about a shrimp export business. So what percentage of our business or what percentage of our processed shrimps do we sell to distributors versus end retailers?
So about 80% of our product goes to distributors primarily because they have the ability to store the product and then distribute it to the retail store based on their requirements. There are a few instances, for example, in take Russia as an instance, where we are able to sell to retailers as well, but these are very large retailers who have sufficient infrastructure to source and store the product for a few months before eventually selling.
And do we get better realizations when we sell directly to retailers? Because I imagine we'll be selling processed shrimps to them, the final cooked shrimps to them.
Retailers also sell raw frozen products. There are some instances where the realizations are better when we sell to retailers. But what we have noticed is large retailers are also just as picky when it comes to price, quality, and delivery time. So since it's a very transparent industry currently, and we mostly white label, we've not been able to see significant jumps between our distributors as well as some of the retail customers. I think when we are in a position to create a brand of our own or go into very niche products, we could see those incremental numbers. This is probably good fortune from working with good distributors as well. So there's not been too much of a difference there.
Okay. And I think last year we did the capex for a new cooked product division, something 4 to 5 crores capex. So what's the kind of capacity that we put up for this division?
So the capacity in terms of, I'll give you the figure in terms of kgs per hour. But on an annual basis, I think we could produce anywhere between 1,500 to 1,800 tons of cooked product per year with this machine. We could scale it up a little further based on operating hours. but this is a recommended tonnage for the year. So that could represent close to about a third of our overall freezing capacity as it stands presently.
And what is the kind of realization difference that we see when we sell this product versus raw frozen shrimp?
Okay. On average, we've noticed that if the markets are like the US, for example, which are generally steady markets except for now, there is anywhere between a 4 to 5% difference in the EBITDA. Sometimes it could be a little higher depending on the size of the shrimps as well. But this is what we've gathered, especially when we've seen the data as well from importing nations over the last few years.
And have you already started selling from this capacity?
We haven't sold to the US, but we have done some shipments to Russia, and they've been fairly lucrative, in fact, more than what I've just described. So we feel that moving forward, the Russian market could be a great opportunity for us, both in terms of cooked and blanched products.
Perfect. That's all from my side. Thanks for answering my questions.
Thanks, Yugal. Since there are no further questions, Sharat, would you like to give your closing comments?
Sure. First of all, thank you everyone for taking the time to attend today's discussion in the call. I think many of you have been really well informed, so it's great to see very specific questions. And yes, the sector has seen some wobbles here and there, but we remain bullish because I think we've seen a lot of this in the past as well, probably worse. And the way forward would be value addition. I think that is something that as a sector we need to really absorb. Backward integration in terms of farming for every processing plant is also important because customers are becoming more and more cautious or picky when it comes to knowing where the product comes from. So it would be important for the sector to adopt a few changes there. Other countries have seen spurts of growth over the last few decades as well. But typically, as with the case of most livestock, these sudden spurts come with certain other repercussions in the medium to long term. And as we speak, the same seems to be occurring to some of the competing nations as well. So all these factors put together, like as a company, we are fairly bullish in terms of our strategies. And maybe it's just something to do with the youth of today, but we remain optimistic, right? I think COVID has taught us a lot of things, and that has really changed the mindset both amongst us as promoters in the company as well as the employees and the team that's been supporting us. So that's where we stand. But it's great to see that not only people from the sector, but everybody else is also sufficiently aware. I think that's probably testament to the fact that the shrimp industry and aquaculture overall has done fairly well over the last decade to attract everyone's attention. But thanks a lot for your time again.
Thanks a lot, Sharat, and thank you all the participants for joining on this call.
Sure. Thank you.
The recording has stopped.